Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 12th, 2025, and we're diving into Seadrill's first quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Seadrill, a leader in deepwater drilling, has just released its Q1 2025 results, and there's a lot to unpack, from their financial performance to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Seadrill reported total operating revenues of $335 million for Q1 2025, up from $289 million in the previous quarter. John, what drove this increase?
The increase in revenues was primarily driven by contract revenues, which rose by $44 million to $248 million. This was largely due to the commencement of contracts for the West Auriga and West Polaris rigs. However, despite the revenue growth, Seadrill reported a net loss of $14 million, which is a significant swing from the $101 million profit in the previous quarter.
And how about their profitability metrics?
Seadrill's adjusted EBITDA improved significantly to $73 million from $28 million in the prior quarter, reflecting an adjusted EBITDA margin of 21.8%. This improvement is a result of increased operating days and better cost management.
Operational efficiencies and future outlook. Seadrill has also reported a decrease in operating expenses. Can you elaborate on this, John?
Certainly. Operating expenses decreased by $6 million to $307 million, thanks to reduced merger and integration costs and lower selling, general, and administrative expenses. However, these were partially offset by higher vessel and rig operating expenses due to new contract commencements.
Looking ahead, what does Seadrill's future outlook look like?
Seadrill maintains its 2025 revenue guidance between $1.3 billion and $1.36 billion. Their order backlog stands at $2.8 billion, providing a solid foundation for future revenue. CEO Simon Johnson emphasized their strategy to focus on a floater-focused fleet and building a durable backlog, which positions them well for long-term value creation.
EPS forecast and analyst expectations. John, let's discuss the earnings per share. Analysts had forecasted an EPS of 42 cents, but Seadrill reported an EPS of minus 23 cents. What are your thoughts on this miss?
This is indeed a significant miss. The negative EPS reflects the net loss of $14 million, which was impacted by various factors including lower economic utilization in Brazil and increased depreciation and amortization expenses. The market might react negatively to this, given the expectations set by analysts.
Balance sheet and cash flow analysis. Let's turn to Seadrill's balance sheet and cash flow. What are the key highlights here?
Seadrill ended the quarter with $625 million in gross principal debt and $430 million in cash and equivalents. However, they reported a negative free cash flow of $72 million, primarily due to payments for contract preparation and mobilization. Net cash used in operating activities was $27 million, indicating some liquidity challenges.
Key takeaways. In summary, Seadrill's Q1 2025 results show a mixed performance, with strong revenue growth but a significant EPS miss. Their strategic focus on a durable backlog and operational efficiencies provides a positive outlook despite current challenges. John, any final thoughts?
Seadrill's ability to maintain its revenue guidance and strong order backlog is encouraging. However, the EPS miss and negative cash flow are areas to watch closely. Investors should consider these factors when evaluating Seadrill's investment prospects.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Seadrill's performance in the comments below.